Share my screen here. Okay, Elise could not make it today, so we'll just be going through the kind of normal things, and then we'll hear a stock pitch from technology. So just kind of some things I want to touch on first. I'll mention something else at the end just because it's new, but I found two kind of contradicting articles. Basically, Forbes came out and talked about how the SASB, the Sustainable Accounting Standards Board, came out and basically, or Bob Hirth from the Sustainable Accounting Standards Board came out and started discussing how ESG metrics are going to be in every single public company. People are going to start looking at them. They're going to be integrated into executive compensation systems and reward systems. So this again just shows kind of the growth and strength of ESG, which is exciting for us to see. And then the Wall Street Journal also, they have a video. I linked it here, so if anyone wants to see it, these slides are in the general body. The date is wrong on the slides. It says 10/19. I'll change it to 10/20. But the video basically discusses how that people and companies are critical of tech because of the issues with the S, kind of the social side of things. It's the same with other companies. And when taking a best-in-class approach kind of is becoming more and more scrutinized. BlackRock does this, but that means that they still can keep kind of like oil companies and gambling companies in their ESG-focused portfolios. So that's becoming, or it's under more and more scrutiny. And then there's still no standardized definitions across all companies. It also makes it so funds could basically put out what their mission is and then not follow that in their portfolios. Another thing I want to mention is just that FactSet, I'm not sure if it's seen their official press release about it yet, but they did just acquire True Value Labs, which is an ESG rating system that uses AI, which is super exciting just to see the growth in fintech and using ESG stuff. So that's awesome.
And so this is an event that's been that's going to be on Thursday night from 6 to 7. So it's a New England Sustainable Investing Networking event. So it's open to only recent graduates and students. It's a really unique opportunity to kind of network with industry professionals. It's going to be open to, I think, all the Boston schools. So it's a really great opportunity to get to network with a lot of the investment management firms in Boston that do ESG specifically. So if you're just looking to learn more about internships and full-time opportunities, it's a great place to a networking event to attend. If you just want to learn what these individuals do on a day-to-day basis, it's also a great opportunity to learn more. So it should be in the Teams chat too, but you can also click this link in our presentation.
Awesome. Here's another little thing from it, but keep going. On October 27th at 7:30, so next Tuesday night, at 7:30, we're gonna do like a spooky sustainable trivia. This trivia is gonna be like scary things going on in sustainability, like scary greenhouse gas emissions reports and stuff like that. The winner of the trivia will get a metal straw that has the Bentley Sustainable Investment Group written on it. So that's pretty exciting. I hope I see everyone there.
Yeah, just a quick portfolio update. As of yesterday, we were down 2.15% for the week, and our benchmark was down 2.25. But markets are up around 1.2, 1.3% today. So I think we have recovered a big percent of our losses, and we have been outperforming our benchmark the past 10 days to 2 weeks. Next slide. Yeah, our portfolio still consists mostly of the two ETFs. So the iShares SDG ETF and Nuveen Large Cap Growth ETF. And Medtronic and Brookfield Renewable passed voting, so they are being added hopefully by the end of the day today. And we'd be up to 4 individual holdings and 3 ETFs.
Awesome, and then I will let Nathan and Cam introduce themselves, but you guys can go ahead and take it away.
All right, thank you. Nathan, you want to share the screen? Yeah. All right, so we are the technology sector. Want to go to the next slide. So we're going to be pitching Nvidia today. So I'm Cameron Tierney. I'm majoring. Well, one moment. The tech sector is having technical.
With that.
All right, so I'm Cam Tierney. I'm a finance major. I'm a junior, and Nathan majoring economics and finance, and he's a senior. And we're the two analysts for the sector. And so just quick overview of just kind of our focus as the IT sector within the larger BSIG group. So I'm just going to quickly kind of scan through this. So we're looking to realize outsized returns, focusing on the themes of data security, supply chain scrutiny, and diversity. Companies that are focusing on those themes broadly. We're looking to diversify our portfolio within the tech sector to gain exposure to hardware and software focused firms. Today we're pitching Nvidia, which is largely exposed to the hardware side. And in general, in terms of companies that we're focusing on and what they're kind of achieving and striving for is companies with outstanding corporate strategy, competitive advantages, and market opportunities presented before them. All right, so today we're going to go through the investment thesis for Nvidia, the industry analysis for the industry that Nvidia plays in, the company overview of Nvidia, how ESG integrated into our thinking on pitching Nvidia, and the valuation, and just kind of a wrap up and conclusion as well on Nvidia. So first up, the investment thesis. So this is just kind of an overview just to kind of get you primed and ready to experience the Nvidia pitch, basically. So Nvidia, they started off as a GPU company, a graphics processing unit. I think they created the first GPU, as it's going to talk about. But basically, we're pitching them on the thesis of they have a large total addressable market over the next decade because GPUs are used in artificial intelligence applications. That's how most artificial intelligence and neural nets are created, run, and iterated upon today, and we see that continuing into the future. And Nvidia has some strong competitive advantages to basically feed off of those tailwinds. And they're making some strategic moves as well to basically further their moat and take up a larger percentage of the total addressable market. So the current price of the company, I just updated that today. It's around $540. I'm sure it's fluctuated a little bit, but basically that's where it's been. Stock's been run up a ton since COVID, since the COVID crash, basically. Yeah, you can kind of do your own research on that. Our price target for the end of 2021, basically beginning of 2022, so almost a little bit more than a year out, is $658. There's a few reasons why we did such a little bit more than a 12-month target. We'll go into that a little bit more in the valuation. Current market cap's around 350 billion. I think it's a little bit less. I think it's 340 now because the price dropped a couple days ago or yesterday. And in terms of ESG factors that we considered, based on the sustainable accounting materiality map, was greenhouse gas emissions in hardware production, energy and waste management in their data center business, and just kind of generally in their hardware business. Employee health and safety, it's always a big focus for tech companies, as well as diversity and inclusion. And then just some of the catalysts, I kind of touched on this a little bit, but we'll obviously go into more detail. But the main catalyst that we're looking at is the growth in their data center industry. And when we say data center, I know some of these technology terms can definitely seem very buzzwordy. Data center is basically where Nvidia will run neural networks for different companies for a variety of applications, and iterate upon those and make them better for a large swath of customers. And basically the proliferation of AI, because we really think it's a nascent market right now, same with Internet of Things and a little bit of 5G as well, will definitely help Nvidia kind of penetrate their total addressable market in the next decade. In terms of strategy and why that's a bit of a catalyst, Nvidia has a whole holistic backend AI solution due to their strong acquisition strategy that we'll touch on later. and as well as an increased demand for PC and gaming, which is kind of how they initially started and migrated to AI once they realized that GPUs can be utilized to really capture the AI tailwind. But one thing I do want to mention too is a couple of years ago when crypto was a huge, there was a big bubble in crypto, Nvidia stock ran up because of that. That's not really anything that's relevant now because cryptocurrencies are not mined with GPUs anymore. They have specific chips, so that's just not a catalyst. And then risks of the effects of COVID-19, vertical integration of big tech. Google and Tesla are looking at making their own AI chips, as well as some other big tech names just integrating more and more, and then just general competition within the GPU space.
Okay, so next we're just going to talk about the industry and some of the trends in which the industry and NVIDIA plays in. So we wanted to look at some trends in each of the segments that NVIDIA gets their revenue from. So first off, their bread and butter when they first started was gaming and PC components. And basically we see the biggest trend in this is that there's constantly a demand for better graphics and processing speeds, either through either for gaming customers or just PC in general. So this is always going to drive growth in that space. And while it might be affected a little bit by COVID-19, we actually feel there might be a tailwind from that as more people are spending more and more time on their computers. Furthermore, there's been major developments in esports. So that's like video games, like professional sports, as well as streaming and just general multitasking with your PC. And so we feel like this is driving growth in that space. As I mentioned before, data centers, we found that there's a CAGR of 6.79% till 2025 in this, just general, or the global data center industry. And we feel like that's going to drive a lot of growth for NVIDIA. And we'll talk about it later, but they've actually surpassed their gaming and PC component segment with their data center revenue. And lastly, just, and we've already touched upon it a little bit, just the expanding applications of GPUs in general. From this graph, which is pretty impressive, we found on Statista, it says that there's a 33.6% CAGR for this space until 2027. And some of the things driving that are general data visualization. So GPUs are used in workstations in a variety of industries just to visualize data, just gain insights from big data, and just generally data in general is just growing immensely fast. So in order to gain value from that, companies need these computers that are powered by NVIDIA GPUs. AI in general, both in data center applications and edge AI, something we'll get into a little bit more, but as we said, it's a nascent industry and it's definitely going to grow. The automotive space we found has a CAGR of 40% till 2026, and that's autonomous cars. So the computers that run that require immense GPU support. And then also in the healthcare space, there's genome sequencing as well as smart imaging to identify illnesses and stuff like that. And these are just the ones that we found, but there's really endless amount of applications of GPUs, and that's what's driving this immense growth. And something we wanted to just point out is how NVIDIA recently has really weathered this storm better than most semiconductor companies. So we're comparing it here to an index SOX that's that covers the whole semiconductor industry. And we just wanted to show how NVIDIA through the recent economic contraction has really outperformed most of this industry. So next for company overview. So just to get a better understanding of NVIDIA in general, obviously it's NVIDIA Corporation, NVDA, on the NASDAQ. It was founded in 1993. And in 1999, it really made its first big competitive advantage jump when it actually invented the GPU. So before that, all processes in a computer were run with the CPU, which was the central processing unit. But NVIDIA actually invented this this component that works alongside the CPU to pull away some visualization and graphic processing so that they can work in tandem. And so since that innovation, it's really remained on the bleeding edge of GPU tech and applications. Most recently, for graphics at least, they started the ray tracing or RTX software. So it's just the biggest jump in graphics in recent years, and they really remain on the bleeding edge. So a lot of companies follow their tailwinds, but or follow them with their innovation, but don't really jump ahead as much as they do. The business segments that they define are their graphics or GPUs, and then compute and networking. So those are the two major segments. And the compute and networking is kind of the data center side. Some of the platforms that they like are suppliers to are obviously gaming, so people building PCs and PCs in general, data centers, visualization like I talked about before. They also play in automotive, and OEM is just original equipment manufacturing. So Nvidia will supply the GPU for a bigger system that's built and then sold altogether. And just some of the trends we were talking about, IoT, AI, big data will drive expansion in the customer base. So here are some of the stock statistics as well as the price over the last couple of years. The CEO is Sun Huang, and he's been with the company since its inception and really is like the thought leader for the entire firm. And we just think he's a great leader for the firm. And so next we have ESG efforts. And we took these from their very comprehensive sustainability report that they publish every year. And they kind of highlight their priorities for the year. So the priorities they highlighted in light of COVID-19 and for 2020 are competitiveness in the business model, cybersecurity, diversity, inclusion, employee health and safety, innovation, supply chain management and product quality, talent strategy, and trade issues. And we don't touch upon all of these, but we really appreciated how their priorities kind of match our thematic priorities for our sector. So moving on, we want to touch upon some risks and how the company is mitigating that, as well as their ESG influence for these problems. So obviously you can't avoid it. COVID-19 has been a big risk for every company. And so for Nvidia, we find that their GPUs support numerous sectors, as we talked about. And additionally, their rapid growth in their data center segment, we feel like protects them from any potential demand drops. Just in general, their diversity across many sectors really helps them for this issue. And furthermore, Nvidia is actively supporting efforts to combat the pandemic, which we think is just an added bonus. So just some examples of that. They're part of a consortium put together by the federal government to just offer their like computing services to help researchers and treatment. They've donated nearly $500,000 to research and treatment directly. They also offer free trials of their genome sequencing tool that's powered by their GPUs to anyone who's going to research COVID-19. And furthermore, they have a call to action. So anyone who has an idle GPU that they're not using or is dormant for a lot of time, they can donate it to this foundation that remotely takes control of it and uses it for research. So that's just some of the comprehensive ways that they've been contributing to like the pandemic efforts. The other two we talked about are just general big tech vertical integration and competition from competing GPU manufacturers. And we feel like this isn't a problem for Nvidia. One, they only get a marginal amount of the revenue from like companies like Google and Tesla, who are now trying to create their own products. And furthermore, we just seen that Nvidia's recent acquisitions have really created a bigger moat for them. So Mellanox and ARM are their two big acquisitions they made recently. And both of these like really solidify their competitive advantage. Mellanox is like a networking company that will really create an end-to-end solution for their data centers. So at first, Nvidia really focuses on the computing, and they didn't really have a lot with network, which is the second half of the data center, which is like getting the information and connecting the servers to the actual devices that are using them. And so Mellanox really creates like the best solution for data centers in the market right now. And then ARM is a company that focuses on lightweight AI solutions. So a lot of AI applications are in the cloud and take place in these like remote data centers, but ARM has chips that can run them actually in the device. So this is another way that like acquiring ARM is just a way that they can control the whole system. Instead of just having the data center, they also can have chips that can run the application actually on the edge. It's called edge computing. And furthermore, these acquisitions also have ESG materiality, as ARM has some of the most energy efficient CPUs. And so Nvidia is looking to apply this to their data centers because data centers are some of their biggest sources of energy use. So just looking at ESG integration more closely. These are the factors that we considered at the beginning. So environmentally, we wanted to focus on energy use, and they've made a lot of commitments in that space. So although their demands have really increased over the last 6 years, they've doubled, and that's mostly due to the fact that they're running so many data centers. They've made a goal to reduce their carbon emissions by 15%, and that's been achieved. And they also made a goal to bolster their use of renewable energy sources. And while they haven't achieved that goal yet, it's 65% by fiscal year 2025. They have used 35, or they've instituted 34% of their energy use is from renewable sources. And lastly, as I touched upon earlier, ARM tech will be used to reduce their data center energy consumption in general, and that will just surpass their goals that they've made. Some social factors we considered is their recent commitment to diversity, and this has been applied through an evaluation of how they're hiring people, and really focusing on underserved and underrepresented populations in tech. So one of like the specific things they've done is they've partnered with an organization called Black/Latinx in AI that just focuses on how these communities are not as well represented in the tech field. And with them, they've sponsored attendance of these communities at their conferences, as well as hosting a number of networking events for these communities. Furthermore, they have a lot of policies focused on BIPOC and lesbian, gay, and bisexual, transgender, and queer employees, as well as a perfect score in the 2020 Corporate Equality Index. And that's just a comprehensive evaluation of how these companies, especially tech, treat these marginalized groups. And lastly, to touch upon the supply chain, we saw how they are a reliable or responsible business alliance member since 2007, a full member since 2018. And that just means that they're doing a lot of work to audit their supply chains. Nvidia is a fabless manufacturing company, meaning they don't like fabricate or mine their own materials. They outsource that. And so through the years, Nvidia has audited 100% of their suppliers, and found that 30%, well, that's not a great number, but at least 30% of their suppliers that are moderate to high risk have actually acted to fix these problems. And these are any problems related to social or human rights as far as labor goes, so like slave labor, child labor, any problems like that. And they really are trying to eradicate it from their supply chain completely. And then lastly, we found that NVIDIA practices a lot of good governance policies. So all their board members are independent besides the CEO, but we have a lot of confidence in their CEO and think that he's very committed to these factors in general. So that could be a bit of a vulnerability, but at least all of the board members are independent. Secondly, they have a declassified board structure. So all the board members are on one-year terms. Additionally, they have a comprehensive committee that addresses like how the board members are or in the C-suite is paid. 80% of the board is female, and they also adopted a majority voting practice, so that gives equal weight to all the board members. And those are some of the governance factors that stood out to us that put NVIDIA above its competition. And then next, to get into some third-party and SDG applicability. So what stood out to us was that they have a AAA rating from MSCI, as well as an above-average Sustainalytics score. And that really stood out to us. Just as you can see, the distribution, only 3% have AAA rating in their space. Furthermore, we wanted to map to some of the SDGs we thought were relevant, so good health and well-being. And this goes to how NVIDIA is supporting the healthcare sector with GPU-powered solutions, and really in general is like combating the COVID-19 pandemic by supporting research and making donations and stuff like that. Affordability and clean energy, we already talked about that, but there is a focus within the firm on reducing their greenhouse gas emissions, and also their recent acquisition really shows how they're making an effort and realizing the impact that they're having with energy management. So their efforts are definitely realized there. And decent work and economic growth. So we just, we're really impressed about how NVIDIA is rated as a place to work. And so I'll show you on the next slide all the ratings they have. So they've been rated really highly by a number of these companies that do surveys and stuff like that to evaluate how good of a place to work. And they were number 4 in people's companies that care. And I won't read all of them, but we were just impressed by that. Fortune #6 best workplace in technology, number 17 in best in Fortune's best workplaces in the Bay Area. So we were just impressed by that. And next, Cam's going to talk about the valuation.
All right. Next slide. All right, yeah, so just a quick overview, kind of went through this stuff already. The price is off. They went up about $10 today, $11 today, so it's about $5.50 right now. Yeah, everything else looks right. In our fiscal year 2022 price target, which is what we're kind of focusing on, honing in on, is $658, and we'll kind of go through that in the next couple slides. All right, so first, comparable companies. It's kind of difficult to find really great comps for Nvidia just because in the chip sector, lots of different companies basically have different business units, but we did our best. As you can kind of see, looking at the EV to EBITDA and price to earnings and just the kind of the valuation multiples, they're high. They're higher than the average, than the average of the sector, and they're high relative to the rest of the market. We don't necessarily see that as much of an issue, compared to Nvidia's comps, because we truly believe that their competitive advantages are going to allow them to be a big winner over the next decade in the data center space, with a lot of different tailwinds that we've kind of already touched on and we'll continue to talk about. So we definitely really view this valuation as a product of low interest rates and future cash flows being discounted that further and further into the future because of that, as well as just their growth rates, or their projected growth rates, that we agree with are definitely high, and we definitely think that they are going to be able to grow into their valuation. However, we did use, I guess we can go to the next slide now. We did use a lower EV to EBITDA multiple for the terminal multiple for terminal value to kind of be a little bit more conservative and allow them to grow into that valuation. I'm obviously not going to go through this entire slide, but you can go through the DCF yourself if you'd like. The equity value that we derived was about $658 at the end of 2021, start of 2022. Their fiscal year ends on the 31st of January. And so that's kind of why it was just easier for us to project it that way. And that's kind of why the price target's in the first month of 2022. And the other thing I want to talk about is just kind of the terminal value in general. It was a little bit difficult because of as in most models, the terminal value takes up the majority of the intrinsic value after discounting. And it's specifically with a high multiple, that was definitely the case. So we had a bit of a difficulty kind of navigating that. We kind of ended up splitting the terminal value 30% to the perpetual growth method and 70% for the EV to EBITDA multiple method. And this kind of we figured is decent for their potential growth over the next decade. And in terms of the perpetual growth rate, we used 3%, which is a little bit higher than what most people might use, using like 2%. But we really feel that, like, just with the macro environment right now, inflation probably rising, this is a very nascent industry. The growth rates are potentially very high, total addressable markets potentially very high, but this is fairly conservative. So yeah, you can kind of go through that yourself, or ask me questions about it as well over the next week when we're deciding on this pitch. The next slide. And so these are kind of the scenarios that we kind of came up with in terms of bear, base, and bull cases. So for the bear case, about $450 by the end of next year. So that would be about a significant downtrend from now. We think this is a low probability, where their expected growth would be lower than what we think it should be, basically, as well as the multiple, and this is key, would deflate over that period. In terms of, it would basically just be lower than the 35x that we used. That would have significant impact on the valuation. So that's going to be a key metric to watch as we kind of monitor this position if it does get into the portfolio, if multiples just broadly come down, or for some reason that's basically just coming, that's deflated, that would affect the price. Base case, we've kind of talked about this a lot already, but $658, solid growth rates for the next 5 years. But competition will drag on them in the later kind of half of the 2020s on capturing a higher market percentage. So that's one scenario that could to bring us to our base case. The other one that we kind of thought about as well is that they might have actually lower growth rates than we are projecting in the model for the first 5 or so years of the 2020s. But then the S-curve adoption of AI will really pick up, and then they'll have significantly higher growth rates towards the latter half of 2020, which would still be able to get us to that base case. So there's kind of a multitude of scenarios that could bring us there. And that would keep the multiple around 35, which is a consistent for the industry. And then our bull case, about $850. We actually assumed, I was fairly conservative even in the bull case, where I assumed lower growth in the near term years, but a really, really exponential S-curve adoption of AI data center over the next decade, towards the latter half of the decade, and as new applications are discovered. Because right now, really, like if you think about it, AI is really used for what, automotive, and a few other things, like some more software focused stuff. Like as that kind of industry really grows, we could really, really see their business accelerate, and because of their strong competitive advantages, and they just would take a large share of the market. Definitely a bull case, but we're obviously focusing in on our base case for this pitch. All right, so next slide. So just kind of conclusion, kind of wrapping things up, bringing it kind of all home. The top bullet is really like, if there's one takeaway, that should be it. They're a market leader with a really expansive total addressable market because they're different businesses. The data center alone, which is our biggest kind of catalyst, should be a $100 billion opportunity, you know, in terms of the entire data center market for AI by 2024. They have really, really strong competitive advantages with GPUs optimized specifically for AI applications. That's a top-down thing. The CEO is very focused on that. He's an engineer. That's one of the reasons we really like him. He's really focused on growing that AI business and optimizing their chips specifically for that application. And they have just the best AI chips out there, bar none, other than Tesla. And Tesla's a very they don't sell their chips to anyone else except themselves. That they're basically vertically integrate theirs, and the only reason that they don't buy Nvidia's is because they decided to basically make their own. That's definitely a risk for those big tech companies. But we definitely see Nvidia as a more of a I don't know what the word is, but maybe like a broad-based solution for a variety of different companies, I guess. In terms of, and vertical integration is really not a huge risk, as Nathan already kind of talked about. And their competitors just consistently lag. I mean, Nvidia or AMD is probably their closest competitor, but they're just further and further distancing themselves from AMD at this point, and we expect that to kind of continue. Although that's certainly a risk going forward if you know the GPUs become a little bit more commoditized or innovation kind of stops. That could be a problem, but we don't see that as the case because they're high R&D spend and just engineering focus as a firm totally. And their GTC, which was the GPU Technology Conference on October 5th, really like surprised a lot of technology journalists, people in the industry about the strides that they were able to make in terms of their new GPUs, and we really do expect that to continue and probably accelerate with their most recent acquisition in ARM, as I'll talk about in a second. So yeah, their strong acquisition strategy, and they also have a software solution too that kind of brings their data center to the forefront and kind of usable functionality for a lot of different corporations. So now basically NVIDIA itself pioneered the GPU, as we already talked about. The networking processing units, excuse me, they're kind of incorporating from their Mellanox acquisition, which is already said and done. That's definitely big, as Nathan kind of already touched on. And now they're also going to hopefully close a deal on ARM, which is a CPU-focused firm. So they're going to have all kind of three processing units as a holistic AI solution for these companies that are going to be able to basically derive insights from large swaths of data in remote data centers and use those for business applications. And then just in terms of the ARM acquisition, ARM is a CPU company. They put a lot of CPUs into a variety of different consumer devices, specifically mobile phones, I believe laptops as well, and stuff like that. So that's a good for the short term to diversify their revenue streams a little bit, kind of grow the consumer business a little bit. But we really don't see that as a significant growth opportunity. We think, as Nathan kind of already talked about, the edge AI, where CPUs are going to be running AI neural nets to basically derive insights from data, will seamlessly communicate with their data centers now because they're integrated with the whole Nvidia ecosystem. So that's a big advantage, because AMD, Intel, all these other chip guys that are operating data centers cannot offer that. And we don't think that they will be able to offer that without significant moves, basically, and we don't see that as something that's going to really happen. And we also think that the data center power consumption reduction is actually pretty important. Data centers, as Nathan already mentioned, really consume a ton of power, and that's a big concern going forward as this business kind of expands. And we think that ARM's technology will hopefully be able to be applied to those data centers and kind of reduce that impact and cost for companies too, because it can be a big cost. And yeah, we already talked about the CEO being an engineer and all that stuff, which is definitely important in a highly competitive and innovative space right now. And the S-curve, if anyone's not familiar with an S-curve, I encourage you to Google that. It's just kind of an adoption of new technologies. We really think that AI is in the very, very early stages of being adopted over the next decade. And Nvidia is just, if you want to take one sentence away, is really just the back end for a lot of AI applications. And we think it presents a really, really incredible potential going forward. So that's it. So if anyone has any questions, go ahead and shoot away.
Not everyone at once. Oh, sorry.
Yeah. How significant is the ARM deal, and do you think it'll go through? Like, will it be approved by regulators?
Yeah, that's a good question. So I've been reading a little bit about that. So there's some questions about how scrutinizing regulators are going to be on that, because basically just really make Nvidia quite a dominant player. I do think it's going to go through, though. I think it's enough of a diversification for them that regulators won't really bat too much of an eye. I think they can also make the case for important synergies. So yeah, I mean, it's definitely, we'll have to see if that goes through. I didn't, when I made the model, I definitely was very conservative in not really adding ARM CPU business into the model itself. So that's an important thing to note. So if it does go through, then we're even more bullish, basically. But we're hoping that it does go through for really the data center applications. But I don't think, if it doesn't go through, I don't think that that's too big of a deal. It would just basically help kind of further their moat that we already think is pretty significant.
I think we'll know pretty soon if it goes through. It's in like the final stages. So.
Awesome. Thank you guys. The voting link for everyone here is in the chat. If you guys don't want to vote now, if you want to take some time to think about it, just make sure you vote by Sunday. Is there anything else? I don't think so. Not then, I guess we'll just see everybody next week.
All right. Thanks, guys, for listening.
Thanks.